Hi, I'm Chris Venezia. I'm an advisor at Ackman Wealth Management. Thanks for joining me in this video as I go over some earnings reports. We're kind of right in the heart of earnings season. We actually have a lot of earnings coming in November, but some of I think the bigger ones people look at, your Microsofts, your Apples, Amazons, those happened the last couple of weeks. But specifically in this video, I took three companies I really wanted to look at, specifically Starbucks, Apple, Coca Cola. I like this snapshot. There's more you can do in there, but I like this snapshot to me because it paints a really good picture of the consumer, and not just in the US, but the global consumer. Right? Coke sold everywhere, Starbucks sold just about everywhere, Apple sold just about everywhere. So it gives you a good picture when you flip through these earnings reports of how are consumers doing, how are different types of consumers doing, how are things happening in different parts of the world. They're great in terms of talking about inflation, Coke, Starbucks, especially talking about where pricing is happening. So I'm going to kind of run through them. Like I said, just like kind of more insight into what's happening with the consumer, which I know everyone is really really zoning in on right now as we go through some of what's happening in the economy. I'll start with Starbucks. Got a nice boost from in the stock performance, kind of off of earnings. And really the biggest thing that I thought contributed to that boost is just what you saw in the US. You saw some really nice results in terms of growth in the US. And what's interesting about that is the boost really came from larger orders, which is kind of a trend that's happened since before COVID, of just larger orders at Starbucks. Maybe not people coming as much. Maybe this has to do with people working less from home, but those larger order sizes. It's been referenced that some of that, of course, is the fall treats, the pumpkin spice latte. But what I thought is interesting about that is it tells you kind of what does it say about the consumer, right? We know the consumer's pulling back in certain areas for the most part. But what this tells me is there's still a consumer that is finding little ways to treat themselves, right? So maybe they're not buying the $100 pair of Nikes, but they're getting the $6 latte. They're treating themselves in different ways, and I thought that was interesting how Starbucks is benefiting from that. China was more resilient than feared. They get pushed a lot on China because competition there is pretty fierce. They kind of push back on that. They also referenced as a positive, their loyalty program continues to grow. So they're getting more and more people to sign up for the Starbucks card in that program. And that's just a really helpful way for them, to keep pushing, recurring customers back in. I thought the interesting quote, I pulled this quote from the earnings call. Their CEO, he said, customer demand for us remains strong. We're not really seeing any change in the sentiment of our customer base at this time. And I think what it does is it reflects the strength of the Starbucks brand, reflects the loyalty of our customers, reflects our position in their routine, also reflects the long-term durability of this business. And we're watching all this carefully. But I thought that first line, customer demand for us remains strong, I thought it was interesting. It's one of those things. Do you look at the consumer pulling back on things like coffee and those things? And they're not really seeing that. You think about the Starbucks customer a little broad, maybe you think more like suburban mom type customer, but you're still seeing demand for Starbucks there. So the consumer, like I said, still kind of treating themselves to those perks. That's all right. Maybe a cake pop every now and then. Shifting to Apple a little bit, I think below what people wanted, especially on the guidance with the iPhone. I mean, what stood out to me in terms of the consumer is you look at wearables, Macs, really underwhelming, like below expectations, pretty poor if you look at kind of stuff you'd want to see growth in. Once again, to me, it goes back to that picture we're trying to paint on the consumer, right? The consumer is pulling back. They're wearing the AirPods longer. Maybe they're wearing the corded earphones like I'm wearing. But pushing back those purchases, having the Mac, not getting the new MacBook Pro M3 or whatever it's called, right? You're seeing the consumer sort of hold off on those larger purchases right now, with inflation eating into wallets. Maybe as the consumer's prioritizing Christmas travel and Christmas gifts, as opposed to buying kind of new electronics. The iPhone I thought was actually all right. I think people wanted the guidance to be stronger than it was. But to me, it still shows, and they pushed on this on the call, that the iPhone is still performing really well. Services was another bright spot, so people are still buying apps off the App Store and spending more money on the App Store. Maybe it's all people learning Spanish on Duolingo, but that was a big bright spot for Apple too. And it just goes, you've seen the stock drop after the report, and then kind of come back up a little bit. Some of it has to do with rates and what's happened on the back end rates, 10-year, 30-year, et cetera. But I also think some of it is as you flip through this and you look at Apple reporting this large pile of cash they have, you look at what happened in services and you look at what happened in the iPhone. I think if you're an investor, you're saying, okay, this is still a company and a stock I'm comfortable owning, right? I think investors are kind of taking that mindset of they have a lot of cash, they're making a lot of money off the iPhone, and they're still selling the iPhone. So you think about that kind of revenue that's coming in off that, and they're kind of sustaining that, which I think for investors makes it adds more safety as investors are playing it. But that initial reaction, a bummer on some of that iPhone guidance going forward. And I pulled this out. I thought it was interesting. Apple looking at China. I know everyone's trying to get kind of a read on what's happening in China and their economy. Tim Cook said, if you look at how we did in Greater China for the quarter, we came in at, on a revenue basis, -2. Keep in mind here that the FX currency impact was nearly 6 points. So we grew in constant currency. Underneath that, if you look at the different categories, iPhone actually set a September record quarter in mainland China. So that's what Tim Cook had to say. Starbucks also talked about the resiliency in China, and that kind of goes against. We're hearing about this weakness in China, but it didn't really come through as strong as I would have expected from Starbucks' call, or from Starbucks' number, or from Apple's call, or from Apple's number. Right, there still is a consumer in China that I think is holding up better than maybe we see. Although it's tough. It's tough to get a great read on China, and certainly there's some weakness, especially in China's real estate sector. Shifting to Coke, I thought it was a pretty good quarter. Stock had a decent reaction. Coke's been, like all staples, kind of underperforming. Talked about the small growth they had in volume, which surprised a lot of people, especially after Pepsi kind of had a volume decline. North America, they were flat. They referenced on the call and the press release. I think it was in the press release. Coke Zero was a bright spot in terms of growing. People are buying the Coke Zero sugar. They mentioned, and this is probably the difference between a Pepsi and a Coke, the CEO, James Quincy, mentioning that they're benefiting from off-premise or I don't know what the term they use, outside the grocery store. Like they're benefiting from people at restaurants and at concerts and at sporting events who are buying Cokes. And Pepsi, I think, Pepsi has a smaller share of that. Coke has a larger share of that. So they're benefiting from that as people go to concerts and sporting events and go out to eat. Coke's benefiting from people getting Coke products as opposed to the grocery store where you have more options. And I think the price is just kind of more in front of you when you're in the grocery store. You're saying, I want to spend this on Coke, or I can get, something else for a little bit cheaper. To me, once again, I go back to what I said earlier when I talked to Starbucks. How does this go back to the consumer? It paints that picture to me of a consumer that is finding ways to cut back at the grocery store, being more conscientious of what they're putting in the cart, but still finding little ways to little treats, right? You're not going to buy the MacBook, but maybe buy yourself Coke Zero because you want a little treat during the day. And Coke Zero is, talk about the difference between a MacBook and a Coke Zero, right? You talk about people finding treats away from home, right? Oh, I'm going to get myself the Coke, right? At the sporting event. I know it's $8 or whatever. I don't know. I think I paid $9. I went to the D-backs game a couple weeks ago. So I guess it was Pepsi there, but I paid $9 for a Pepsi at Chase Field. But just kind of going back and, what's the consumer doing? The consumer's pulling back from the big ticket items, still finding ways to treat themselves. And at least in the US, you're still seeing a consumer that largely is hanging in there, is what I'd say. Obviously, different tiers doing different levels, but I think this earnings period is telling us that you're not seeing robust consumer growth, but you're seeing a consumer that is still hanging in there, still managing to pay the bills for the most part. And certainly I think that's a little bit better than what people have been expecting. We've been expecting this really big consumer slowdown. And like I said, the consumer largely, when you flip through these earnings reports, are hanging in there. I pulled this, which I just thought was interesting. It's an interesting thing to end on. And it's James Quincy, their CEO, talking about packaging. They were asked about packaging. And he said, we're not capturing all of the opportunities that are there. And the leveraging of greater pack diversity actually helps in an environment where, as you have in the US at the moment, certain segments of consumers feel under disposable income pressure and will look for more affordable options. And yet there are plenty of segments, either in terms of their income or in terms of the channels they're going and spending in, who are more disposed for premium options. So I thought that was interesting in terms of how Coke is thinking about packaging and labeling and selling things to market to different types of consumers. It tells us we're going to see different types of packaging at the supermarket, which I mean has been a trend I think my entire adult life. I'm 31, and it's just expanded after March of 2020, where there's more shrinkflation happening. I never thought of that, the premium consumer, and how does Coke package and brand and label and maybe attract that. I don't know why I keep going here, but the suburban mom in Paradise Valley, Arizona, that has to have her Diet Coke. I think it's interesting that Coke is evaluating that, and I think you're hearing that especially with the streaming companies, Disney, Netflix, all those type of streaming channels. There's more of this conversation right now of companies breaking down their consumer and trying to target a different consumer, right? I want my high tier consumer to pay more, but I still want to reach maybe the lower, I guess I'll call them the lower tier consumer who maybe can't pay as much. And Coke kind of signaling that in terms of a consumer staple lever. So, really to summarize, said it a couple times, but the big thing I took out of these three, Apple, Coke, Starbucks, and what I'm kind of taking as you read through the consumer holding up. They're still shying away, as inflation and everything else from those big ticket purchases, but they're still spending on those smaller treats and finding certain ways to treat themselves. I think the final thing, which I didn't touch on too much, is if you look at Coke and Starbucks, if you look kind of towards their guidance, you're hearing less in terms of price increases than you certainly did a year ago. That's a great sign. I like to wait and see what they actually do. Um, but certainly a good sign that you're hearing less in terms of talking about inflation and price increases in North America and Europe than you did certainly a year, 2 years ago. So yeah, that's kind of your run through on the consumer and on some earnings. I'm Chris Venezia, advisor at Ekman Wealth. If you want to talk to us or learn more, we got info below in the info section. If you disagree with anything I said, leave a comment. I love, hearing different things and what you're seeing, and maybe you have a different read on what's going on, or maybe you've seen different things than what I'm talking about. Certainly love to have those dialogues. Just keep learning. So yeah,